well. I would say when the coronavirus pandemic was really picking up, companies that focused on travel and hiring, they kind of got destroyed. They were all freaking out. And when you go through Y Combinator, there's this like sense of demanding higher valuations, and investors complain about it all the time. It's just that like you're a YC company, it's going to demand higher things. Those valuation like multiples kind of got ruined a little. Like it was all about what value are you actually producing, right? Like what potential do you have? If you're pre-revenue, obviously you can't demand as high of a valuation because the proof is in the pudding, and you don't have any pudding. And at that stage, it's kind of like if you don't have any revenue and you are a company where like you make it easy to hire people, and your business model is like you take a percentage of like a new hire salary, like a Lambda school or something like that, then it's kind of like you're in pretty shaky ground, right? If you're like Square, or like Stripe, then you have a better chance, because as things move digital, your business is, it's looking pretty good. Like Airbnb and Stripe are like the biggest YC companies. And I remember just like Airbnb was like a huge topic when the pandemic hit, because they had taken like a $1 billion loan from Silver Lake or something at a 10% interest. And we were all looking at that like, I would never want to have $1 billion loan at a 10% interest. That's just not something I would ever want. So from what I've seen, like people who are doing well are doing well. People who are riding a trend, like remote work has become a huge thing. Companies that are servicing that, they're still doing well. People are still raising money. If you don't have any revenue, if it's like a long-term thing, if it has to do with things that are kind of slowing down, then yeah, they've been having a harder time. Like a friend in my batch, they were working on a health insurance for startups, where now like most startups, myself, like ours included, like we would just rather not be in the position where we have to pay health insurance right now. Like if you can use a contractor, you're going to use a contractor. So like he's had a pretty tough time because it's hard to get revenue, and also the people that he were pitching are kind of like reassessing their portfolio, being like, if this was, like a hot market like it was before, then I wouldn't mind waiting like the 2 years for all of this to kind of come together. But, they like pulled out because they're just kind of, it's really high risk, and I'm not certain about it right now. So that's kind of like what I've seen after COVID hit.
So, I do want to add something, right? So I do spend quite a bit of time with startups and working with startups. And I think and everybody knows this, right? When you go in and, you get that first pitch deck, that's not going to be the company, right, that exits, right? Like you build that pitch deck, especially the early stage companies, you build that pitch deck, it's based on a bunch of assumptions. You go in, you start your business, right? You test those assumptions and you pivot, right? And so that end business looks very different than whatever that pitch deck looks like. I think for companies, what I recommend my startups do is they stay very close to investors, right? Instead of just going in and talking to investors when you're going to raise, is to build a relationship with investors, right? Especially, the early stage companies, because you'll meet investors like, yeah, you're a little bit early for us. But if you maintain that relationship, it'll really give you a really good pulse on your business, what the valuation might look like, and also how you want to raise, because that relationship is incredibly important, right? Because I see that today with the startups I work with, right? So I have a startup and they did, a seed in early 2019 of 2 million. They did a series A of 8 million at the end of the year. And, COVID hit, and now they're just raising another 3, but they stayed really close to their investors who understood how the business has changed, right? So yes, your revenue targets change, your hiring change, your strategy change, but there was a lot of investor confidence in the company in terms of how it made those changes, and staying close to the investors and just keeping a relationship allowed them to just, raise the 3 really easily.
That's a really
and
good point.
that's I think like we kind of talked about it before too. It's if you're getting into an investment, you should know what you're getting into. If it's a public company, you know, they have earnings calls, like there's like news, there's like analysts, there's a bunch of stuff you can read. Private companies are kind of like different. Like we had like even one of our investors in one of the rounds earlier, they just like gave us money because they believed in us and have literally never asked for like anything. Like I don't even know if they're reading. Like we're sending them like
the best kind of investors.
Yeah, they just like there's like you take some of my money. But like yeah, you know, I think it really comes down, especially if you're a founder, like I think founders at a startup, like you kind of like force things to work, right? And I think part of that is like maintaining a good relationship with your investors. Even like, especially I think if things aren't going the way that you expected to, like I know a lot of founders, like the first thing they think is like, we just have to like get this one more customer and things will be okay. And then we're gonna like email our investors. Like, no, like you should keep them updated because number one, they might be helpful. And number two, it's always better to just have transparency on that side, just so that like they understand who you are as a founder also. And, you know, like that kind of, I think at the early stage, you know, a lot of things can go wrong. There's a lot of risk. So having that kind of constant feed of information is always helpful.
Yeah, and that brings up a really interesting notion of when to engage investors in your sort of product development and launch process. Actually, so quick question for everybody here. Do you see any kind of specific trends in terms of the types of rounds that are coming up? Like, for example, do you see more safes now being the trend, or are they price rounds, or is there a trend towards more convertible debt? There had been a convertible debt trend in the East Coast for the last 10 years, at least in my observation from ARC, a fund I invest in. But you know, I mean, each of them have different strengths and weaknesses. And for folks that don't know the terms, basically a convertible debt round just simply means that it's a piece of debt. It's a chunk of debt that has interest rates, converts into equity at a certain point in time, given a certain kind of trigger. Price round essentially is buying equity, and then safe is a sort of it almost acts like a warrant. In other words, it's a future equity round at a certain kind of set of agreements today. So to the panel, what do you guys think? Are things changing since COVID, or you feel like it's sort of continuation trends in that section?
Okay, so I will say, if you have any knowledge of investing, nobody does a safe anymore, right? I know it was like a trend a while ago with Y Combinator and Andreessen Horowitz, but it gives the investor zero rights. And so I don't know anybody that I work with that does a safe anymore. We do see still a lot of convertible notes. And then I think if you are a seasoned investor, you know, you can kind of force that priced round. But I think it's, you know, there's still a lot of convertible notes or convertible debt that I see for the early stages. And then I'll throw it over to David because he probably sees.
Yeah, I think convertible debt is the cleanest way and most vanilla way. So in the investor world, I guess, or in VC, it's like you can tell whether it's an investor market or a founder market. Right now, it's an investor market for sure. I mean, there's an abundance of capital, but it's smarter to go as vanilla terms as possible. Don't do safes. I mean, I can't say don't do safes. I'm not gonna tell you not to. But when you look at the cap table, or I guess when we look at the cap table from our side, part of our due diligence is to do waterfall analysis, and it just gets so dirty if there's too many of those, you know, too many different warrants kind of set, and we have to navigate through all of that. What I am seeing though, even earlier, is that you know, micro VCs are writing full rounds at earlier stages, which is quite interesting. So they'll negotiate. Like, so one of the companies I'm advising right now, you know, pre-rev, pre-product, the market is just insane. So they were able to work out a really early pre-seed round with a great investor down here in LA. So they took the whole round, but one of their mandates is that they wanted to open it up to, one of their investment mandates is they opened it up to other investors of color. Not that that's related to the round, but the fact that they just stepped in, wrote a term sheet right away was kind of surprising to us. And so we negotiated, for the terms, making sure that there's no onerous, warrants or I think early on board seats, you don't need board seats at pre-seed. So there's like standard terms that we just had to wipe from the term sheet. But I'm pretty surprised, and I'm hearing this also from other friends that are raising, is that price rounds earlier, we're just kind of seeing an interesting pattern, just kind of in my micro sense.
Mm-hmm. Kevin, any thoughts on that?
I don't know too much about this side of things, but yeah, like convertibles are kind of what everyone seems to, or this is what we did in 2018, 2019, and it's what we're looking to do for our round coming up. So I think that's just like, I think everyone kind of does it that way, and I agree. Like from a founder's perspective, also, like the more different instruments you use, you're gonna need to raise another round just for the like legal fees. So it's best to not overcomplicate that. Like lawyers are so much more expensive than you would think, and like basically you like get your fee from like your lawyer, like your bill, and you're like, wow, like I could have hired someone with that, or like that would be like 10 contractors. So like just like don't overcomplicate things.
Mm-hmm, mm-hmm.
Oh, and that usually gets pushed onto the founder in the term sheet too. So like the lawyer fees kind of get wrapped up in a you owe them, not us.
So negotiate, you guys. So all you founders out there, like I know Wilson, Cooley, you can work with them to defer a lot of those legal fees until you raise a serious, like series priced round. So negotiate that.
Yeah, and what I'm hearing is sort of a consensus around convertible debt. The other thing that convertible debt has as an advantage is that it just delays the conversation around sort of valuation in some ways, rather than a price round, which can have all kinds of exotic kind of attributes, such as right of first refusal or preferred shares with like liquidation like preferences, which essentially means that you put money in, you get like 2 times the money out, things like that. If you're a founder and you see that in your term sheet, just walk away. That's too exotic and a little bit founder unfriendly. Okay, great. Well, I'm going to take a moment. Also, I want to leave the table open also for any kind of pointy questions so far from the audience. Folks that have been listening in, based on what we talked about, is there anything that kind of jumped out at you, or any kind of thing specific that you wanted to kind of ask the panel or anybody else in the room? Don't be shy.
Apart from the one thing that you mentioned, one benefit that you mentioned right now, like what is the incentive for an investor to agree for convertibles instead of pricing? Isn't it better for them to get equity upfront or like get a share upfront of the company?
Everyone want to take that one?
Okay, so I think that investors would like to get a share of their company. I think it's really hard because what you have is you kind of come in and the investor, I will tell you, the founders always overvalue their company, right? It's, like there's this, I think this story where I think a Sequoia partner they were talking to a bunch of entrepreneurs and said, how many of you think your companies are valued at $10 million, right? And everybody raised their hands. And the Sequoia partner said, you should go sell your company right now. Go sell it, because I don't think it's worth $10 million. So there's always this thing where your founder thinks that it's worth a whole lot more than it is. And so it's going to be like, it's really hard, right, to kind of go down that path and say, really, you have no product, you have no revenue. Yes, you think that, you know, you're going to be $1 billion unicorn in like 2 years, and that's just not reality. So the convertible note, I think, is a good middle ground to say, okay, you can say this, and then we'll see what happens when it converts, right? So, but you do have people that come in and they want a priced round and get equity, because I just made an investment in an edge computing company, and it was priced. You know, so I knew that I got 50,000 shares for $25,000.
Okay. But is that just kicking the can down the road to some extent, or does that give time for investors to evaluate the business more or something? Does it give them any other protections?
I don't particularly think it's protections. I think it's just the natural. Oh, I don't want to say the natural, but I think it's the nature of the business. And so convertible notes were designed really for the legal process just to be fast, because no one wants to negotiate term sheets for weeks. You need to run your business, and so it's more important for the founder to spend the time, you know, running their business rather than spending 6 out of the 12 months fundraising, and then you need to run the business. But I think price rounds from an investor standpoint, and I want to actually add something to this criteria later. But from price rounds from the investor standpoint, is we're humbly greedy, so we have to be somewhat greedy to get on the cap table and own a maximum percentage of what we can get. And like I said, it's an investor's market at this point, and we can set the terms, and founders are not going to say no. And that's kind of not, that's kind of an interesting way to say it, but I want to add something to this context, which is when you're an angel investor and you're kind of running into a company, or you're doing, really early due diligence on a founder that you might like, what you may be actually doing is typically co-investing into a deal, and you might not be getting that full 20% that was negotiated from a lead. So there's a difference between a lead investor versus a co-investment and an allocation. And you'll find that, let me try to define this, but you'll find that, say you put on the angel investor hat today, and you said, hey, I want to put $10,000 into this company. There's some technical aspects of of that founder's business that you might need to suss out before you can put that $10,000 in. One is you need to see how much allocation that they've put out, or they've allocated to sell of their company, and then who's leading it. I'm sure a lot of people actually will just take cash. We've seen this, and there's definitely some instruments to do so, and convertible notes like a great way to do it. But as you're stepping into price rounds, for example, our fund, we primarily co-invest, and the reason is we like to see. It's not a herd thing. It's mostly that the terms we're not in, because we have an education platform on top of the fund. You'll have a different investor every quarter, and so typically co-investment happens there. And so when the co-investment happens, what is the allocation that you'll get from the startup? It's not always going to be 20% either. Does that make any sense?
To some extent.
Yeah. So your ownership of those stocks is going to be dependent on how much you can get allocated to yourself. And it's quite competitive once you start getting into kind of the larger, more competitive deals. But if you're an angel investor, for example, and you have a network of awesome engineers that they're starting a company, that's a little bit of a different practice, right? And you're really just investing in kind of the dream, and you're going off of your own personal conviction, off of their abilities. And you would say, hey, let's do a convertible note. I'll give you 10, 20, 50, $50,000 for you to start your company. And that's a very pay it forward kind of methodology, but, and then you just have to agree on how much you own with that percentage.
That is upfront when you may write the convertible note.
Right.
Okay. Okay. Thanks, guys.
Any other questions, guys? Okay, interesting. So then, in terms of valuation, well, let's just take a step back. We've seen sort of a huge bull run in the past couple of years with startup investment, and furthermore, I think some of you guys have mentioned already, a lot of these micro VCs emerging. So, in other words, there are more players out there competing for maybe the same deals, and so the cream rises to the top, and there are deals that are maybe hunting for investors that may not get the light of day. What is your filter when you're looking through companies? How do you decide whether a company is worthy investment and whether, you know, maybe essentially what's attractive, right? So can somebody share their process and what they think?
You want to play paper, rock, scissors, Alysson?
I know, it's like me or you.
Okay. I'll do like a 5-minute version, and I'll hand it off. But the 5-minute version is, I think the major criteria, especially because of our mandate at the fund, it's early stage seed to Series A, and so in that early stage, you really have to build conviction for the execution of the team. So team is kind of at the top. Market, it has to be, you know, multi-billion-dollar market now. It's kind of a criteria there that we look at. We want to make sure that the market's attractive. And then we look at, you know, timing. Timing is always a big one. Traction and product are actually a little bit lower on the criteria, but we do have a 12-point criteria checklist. But I just kind of spoke on the top. But as we started to speak to more, you know, veterans in the space, it's really interesting because, and Alysson will probably have a lot more to say about it, but you're really investing in that team because that's the only constant over time. And so, you know, we've spoken to some big funds and we always ask them the same question, same thing in a format like this. And they say, well, we go team, team, and team, and then team and team. So that's all we get. And the thing is, you start to have, and Alysson actually, I like the criteria when you can kind of build it off of human capital and really judge off the person's demonstratable ability to execute. But I'll leave it there.
Yeah, and I'm going to concur with that, right? Because at the end of the day, you know, especially if you're in the early stages, right, that pitch deck means nothing. I mean, we look at it to say, did you think logically around this, right? Like, were you rational? Did you do any market analysis? Do you understand TAM, right? Like, do you just understand the basics of, you know, what you're doing, right? I mean, that's really, that's just like an analysis of your thought process, right? But that end company is not going to look like what that pitch deck looks like. And so I know Kevin can talk to this. When he first started YC, what they thought they were going to be doing and what they're doing today is completely different. And so what you're looking at the team. You're looking at, which is how, like, I've always gotten involved with human capital, which is, do I believe that this team can be successful? Where are the holes in this team? Because they're going to need to pivot. And do I believe this team will make it happen? And so what you'll see is, you know, why repeat successful entrepreneurs constantly, you know, are raising money, right? And they're building companies because that's where you get the highest level of de-risk. And so you look for And so if I'm going to break down the team, it's looking at, you know, do you have a great leader? A leader, have they done this before? In their teams, do they have somebody that's gone from a Series A through a Series D? I mean, that's a huge thing, because at each of those series, that company has changed significantly. And so can you navigate through Series A, B, C, and D? We look, you know, the advisor set matters, right? Because it's about the network, right? You know, can you get to where you need to get to? Can you have these conversations? So I have a company there in the sensor mapping for autonomous, right? And what's really great about them is their network allows them to talk to Porsche and Waymo and GM and trucking, right? And that becomes incredibly valuable, because they'll be in a board meeting and you'll have, you know, the guy from Waymo there, and, you know, the CEO will say something and he's like, no, I think you need to do this. And it's not that he can't disclose any confidential information, but he knows enough to say, you know, just kind of keep you in your lanes. And believe it or not, that's very, very valuable. So it is, we look at, you know, it's not just the immediate teams, but who surrounds this team too. So whether it's the investor set, the board, you know, the advisors, you know, create a lot of value. But I think the team allows you to do so much, because I look at that team and say, yes, I believe that this person can hire, manage, scale, grow, create investor confidence, and basically sell a product at the end of the day.
Kevin, since you've been through this process, have you felt that was part of the discussion, and how did you kind of position yourself?
Yeah, so a lot of interesting memories came up as Alysson and David were talking. Well, let me start out about like how to think about it the right way. Is they're right, the team and market for sure, because like nowadays things are so competitive, right? Everything is so competitive. The cost of creating software is so low now. And so there's all this stuff out there. And basically, if you don't have a huge market, then like if you have $100 billion market and you can capture like 1% of it as $1 billion, because it's competitive, right? But if it's super competitive and you can only capture 1% anyways, and your market is like $100 million, that's not very attractive. In terms of the risk to reward, that's horrible. And in terms of team, yeah, we've gotten this like multiple times. There's always the word founder in like every single thing that YC preaches. It's always like, you gotta be like this type of founder, like this is the founder's responsibility. Because at the end of the day, like I said, like it's very unlikely for your startup to succeed. And as a founder, your goal is to pretty much make it happen somehow. Like against all odds, you have to force it to happen. So like people who are, like I have this great idea for an app, I'm gonna try to raise money off of it. Who have never been through like how hard it is to make a startup before, probably not great, because there's a lot of things that like sometimes you want to give up. So like people who have stuck through it, like that's always good. Team, and they're like engineering talent also, I think that was kind of mentioned. I think a lot of people underestimate now. Like I see a lot of like non-technical founders. Engineering talent is so invaluable, because you can have all the contractors you want that you're paying, you know, like, and they're like, can be like in Costa Rica, like a development firm, super cheap. But when that customer is like, hey, like I want this problem solved, like how soon can you get it to me? Only the founders are willing to stay up for 40 hours straight coding it and like getting it to work. And then that customer is super impressed. So like, yeah, team I think is probably the most important. And then like market, we have a thing called vertebraes at YC. So about 2 weeks, 3 weeks before demo day, they always do a session. You sit down with the partners and they go through your company, what you're doing, who you're selling to, what's your business model, but most importantly, who are you, right? Who are you guys as founders? And they create this thing called a vertebrae. And that vertebrae is basically like, now was this Zoom, so you don't have to memorize anymore. You just keep it on your monitor. But yeah, you refer it, and like anytime you deviate away from the vertebrae, things don't go so well. Anytime you stick to the vertebrae, things go pretty well. So like from the founder's perspective and what they preach, yeah, like I would say Alysson and David are definitely hit the nail on the head.
That's great. And having raised a round of capital myself for a company, I found that sort of hierarchy to be also true. I think the other thing that seems to be fairly evident is timeliness, right? In terms of, so like, I mean, obviously this actually relates to how well your go-to-market and how successful you are in acquiring customers, but also timeless in terms of just the saliency, the sort of a greater kind of social kind of need. And we've actually seen this kind of change a little bit over the last couple months, right? Because before COVID, there were certain things that were hot, and now there are certain other things that have kind of emerged as in their place as more important, more salient, such as, you know, health, biotech, work from home, essentially, any kind of remote enablement. Things have emerged and changed, so that's a very interesting notion. So other founders in the audience, do you guys have anything to add in terms of how you guys kind of how these conversations went for you? What have you heard other VCs or investors ask you? I'm just be curious to hear what people have experienced. And maybe I want to pick on one. Francis, you just successfully closed a round, so I'd love to hear your thoughts.
I feel like something that people didn't tell me was, as a female founder, I was like, oh, I'm going to talk to female VCs. But that was a terrible idea. And so I think doing your due diligence on what the VC invests in, like what is their vertical, where is their strength, is so important, but something that people don't really tell you about. Because for example, my investors, they only do weird direct-to-consumer products, which is why they're a good fit. But they said they get hit up by like SaaS companies all the time, which obviously those founders like never read their website. So just like doing your due diligence on who you're reaching out to, because it's a pretty small world.
Mm-hmm. Alysson, as someone who sat on the other side of the table, what has been your observation in terms of the gender imbalances and things like that? In terms of who you talk to?
So unfortunately, there's more just male, kind of entrepreneurs running around, and the data says that too, right? The data, in 2015 said there was only like 4.9% of female companies that, received VC funding. We thought that would be the lowest it ever would be. And then in 2019, we were at 2%, right? I think there was an analysis done at one of the TechCrunch Disrupt, and it had basically male and female VCs. We thought, okay, if we add more, female VCs, we'd have more female founders who would get invested, and that wasn't true. And they did this analysis, and what they had was female VCs, male VCs, and what happened was, irrespective of if it was the gender of the VC, if you were a male founder, they asked promotional questions. And if you were a female founder, they asked defensive questions. And so the example is, okay, if you were a male, they'd ask you, okay, so you know what, how are you gonna make, you made $1 million. How are you gonna make another $1 million? And if you were a female founder, they would say, oh, well, how are you going to defend that $1 million? How are you going to continue to make that $1 million? And so it's really fascinating to kind of just look at the dynamics and the questioning that comes out, because there is some gender challenges, right? For females, when they are, basically going and talking, whether it's like a female VC or a male VC, I don't care. I mean, I actually find that if you're a female founder, it is worse to go to a female VC than it is to go to a male VC. My personal feel is that women don't support women, and that's I'm going to make that statement here because I find it to be very true. I think women are atrocious.
You know, Alysson, my sister also sits on the other side of the table, and actually she's made interesting sort of observations like that as well. It's also very curious, and also like I would say our audience is also Asian. I would even make the conjecture that Asians don't always support each other either. There tends to be competitiveness.
I've had the best, honestly, I've had the best interactions with my Asian counterparts, no matter what part of the world they're in. And that, I don't know, you know, it's kind of weird, but I mean, I'm just going to leave it there. But it's been pretty positive from my perspective, and I think me reaching out to women-led VCs also, just to try to co-invest or anything, they will not accept any of my, you know, invitations or connections or, you know, engagement. So
yeah, I know we've got to change that. I mean, I think that so if I think about kind of Asians, it's interesting because I think in the past you had your individual diasporas, your different Asian diasporas, and they kind of stayed within their little diasporas. I think COVID-19 has really changed that. I think that I see like a lot more of just Asians coming together because now we're kind of getting grouped together. So it's not just, okay, I'm, you know, Chinese, Hong Kong, Taiwanese, Japanese, Korean, like, you know, we're all Asian. And so in the past 6 months, I've seen more of Asians coming together than I think they had in the past, to be honest. Now, not that, you know, people aren't friendly, but you know, I think there's just more collaboration, right? So, you know, you will have people coming together, both from a founder perspective, but also from an investor perspective.
Yeah, the term Asian is a monolith too. So it's like, it covers a lot of stuff.
What I would say, David, though, is it's very interesting, and this goes into sort of our greater kind of social fabric, right? As an Asian American or Asian Pan-Asian kind of identity, I think like obviously we are parts of many different waves. Like for example, my family, just like Alysson, we were part of the wave that came after the fall of Vietnam to communism, and we were refugees essentially. But then you have this whole generation of individuals who came before that in the 1940s and 50s from other countries, for example, Japan or whatever, right? And even before that, you had the Chinese Americans who came in the 1900s, in the late 1800s. And so, and then let's just not even discounting the fact that there's so many countries in Asia, it's hard to have a Pan-Asian identity in that sense. But what COVID's really kind of done is kind of put us all in the same position in a way, right? We've been othered into kind of supporting each other, which is interesting. Now, I don't know how it plays out in sort of the startup and venture space or even the corporate setting, but I'm curious if you guys have observed the same thing. That's at least my observation here.
You know, I mean, so I'm going to say, you know, because I've been both on the corporate side, right, and kind of the investor side. And so when I used to be out in Asia and I'd be, you know, the owner of Asia, it was kind of one country, right? Like it really was one country. I think that there is greater awareness today because I think in the past, when the US was really dominant, it could say, you know what, we're a best practice and you guys are just going to live with this. We don't care where you are in Asia, right? Like I've had to roll out Salesforce.com. It's a condition of employment, right? You're going to use Salesforce.com, even though it is horrible out in Asia. And I think what's happening now is you get the rise of Asia where now, you know, there is more of a power balance. And so the power dynamics have changed now. We've realized that there's value in kind of going local and also regional. There are no such thing as global best practices. And so I think that leveling of kind of that power balance has really helped, you know, kind of this term Asia and the awareness of both the power and the differences, right, in the Asian countries has, I think, been accentuated.
Yeah, there are definitely big geopolitical kind of implications and how they affect us as a community as well, which is very interesting to observe.
I also think the U.S. is actually one of the only countries after travel in the world that really emphasizes identity politics. And you know, you go to South America, they don't have a census, so it's like, you know, you can be Asian down there, but never be asked if you're Asian. Kind of in a weird way, and I think I'm watching Chinmay, just like I'm watching his facial expressions too, because my Southeast Asian brothers and sisters are also like halfway celebrating for a possible Democratic, you know, person, but then also like there's a lot of discussion around that as well. And I think it's interesting because some very, very powerful people in venture capital, you know, a good portion of them have Indian last names, you know, and it's an interesting kind of time where it's like having a global perspective is actually a bigger benefit right now than having kind of a tighter lens. And so those that really adopt that global perspective are definitely going to see more, perceive more, and see more deals even. So when it even comes down to the, you know, information, the deal flow, all the currencies that make investing possible, I'm very, very excited about how the future is going to look pretty soon. So, yeah.
Yeah, just to a funny story on this kind of topic. After demo day, like we had a bunch of meetings, and one of them was with a fund based out of Korea, and I'm Korean. My co-founder is not. And so they, you know, I very much knew they were Korean, but I didn't say anything because, like, you know, I didn't really feel like it feels like so blatant to be like, hey, like I am Korean, like we should be friendly. So, but you know, they were like at the end, they were like, hey, like what Asian are you? I was like, oh, like I'm Korean. And they're like, oh, like Korean, like, oh, like is he Korean too? And then you're like, no, like I'm Chinese. And they're like, oh, yeah, so what part of Korea are you from? It was just so bizarre because it was a 30-minute Zoom call, and the last like 10 minutes was just like talking about that. And I don't know, it was like super bizarre because it was completely different from all the other calls we had. Like none of the other investors that we talked to would ever spend time like that. So it was definitely a weird experience.
Was that a shared, like, were they looking for shared commonality or for trying to understand differences? Maybe that's a kind of interesting question to ask.
Yeah, I honestly I have no idea. They were just like talking. We like talked about how Seoul has changed a lot for a long. That was like completely unrelated to fintech and like our businesses. It had no relation at all. I was very much confused as to what was going on. But yeah, they were like, anyway, like they're like, okay, cool. Anyways, yeah, like nice to meet you guys. And I was just like, all right, I don't know what just happened. So bizarre. But yeah, I would say like we also had another investor. We only have one Asian investor. And like this, you know, this topic like doesn't come up at all. Like almost all of the investors that we've talked to, actually, like there is like no concept of race or whatever. It's all just straight, what is your business? What is your market? What's your value proposition? Yeah. So I haven't personally experienced like anything regarding like race or gender or whatever outside of that one strange encounter.
Yeah, I would say in New York City. Oh, sorry, Alysson, I want to add one point and then I'll pass back to you. I want to say in New York City though, the characteristic, I would say the way VC works in New York City is that it's mainly people from banking environment, sort of backgrounds in many ways, not necessarily founder backgrounds. And so, as you can imagine, if you come from sort of a monolith like that, you have a specific kind of way of thinking and also a specific kind of network, right? The cases where I came across, I've several friends who work in who have their own funds, and they are of Asian heritage. The several cases where I ran into people I didn't know that were of Asian heritage, they basically they made the same observation. It's focused purely on what you do, right? It's numbers and how well you can execute, et cetera, et cetera. It's never a conversation about identity. So yeah, it's interesting. It's sort of like the same kind of playbook gets kind of like passed on as the power structures kind of spread their tentacles, if you will.
But would you, sorry, would you as a founder want someone who cares about your identity, or like, like you said, these investors, Kevin, who talk to you about things other than business, would you want them as your investors or not? Because I'm not a founder, but like I can kind of classify at least like Indian society into these two parts, into these two different segments, where like one would like, favor you because you're from their town, or invest in your business because like you're from the same like, caste or whatever, and they don't even believe they are discriminating in some fashion. So like there is that part of Indian society, and that there's another part which probably, David, as you said, like, Indian last names who are leaders, like they probably look at numbers, and I know people like that as well, like who are more objective and like, okay, what am I getting into? Like, I care about what you do, not where you come from, where you stay, what your hometown is, and all that stuff. So as a founder, which one do you favor?
I always the objective, just because like it's like a risky environment. Like it's inherently high risk startups. There's like so many unknown things. Like there's so many things you have to worry about. Like basically like every morning I wake up and I ask myself, what is the biggest problem to solve? And that biggest problem cannot, like, I don't want to see like anything, there just can't be anything outside of like the company and like the product, like even anything that introduces, if you have options, that is, by the way. Right, so it's like in a competitive market where you're talking to, let's say, like 100 investors, and like 10 of them are interested, and one of these guys is like talking to you about all these things other than your business, and he's like he's not like that sophisticated or whatever. It's just like, oh, why would you do that? It doesn't make sense to me. I would just go with, like, it's a different story, if this person is like, I don't know, like Jack Ma, by all means, if Jack Ma is talking to you about Chinese food or whatever, you should get Chinese food with him. But like, if they're just like just as qualified as other people, just as smart, like just as curious, whatever it is, but then they also have to are like obsessed with like the racial stuff or whatever it is, and like, I don't know, personally, well, I don't know if it's good or bad. It's just not normal, and I would prefer it to be normal, just to reduce the amount of variables that you have to handle.
Yeah, I just have a little like addition to that, though, is I think being aware of where the certain individuals come from, because, for example, when you're working with high net worth individuals and family offices, each and every one of those mini groups has their own kind of individual cultures. It's quite interesting. So being able to navigate those is really a skill, even from a founder's perspective. And it's not necessarily to take it apart or try to overanalyze or try to identify. I think the optimistic approach or the best approach is, one is, yes, be objective. Money talks. Money always talks in these kinds of deals. But how, I think what we're also going to notice in terms of where these investments are going to go in the next 5 to 10 years is that we're all going to have a lot more empathy. So empathy is going to be such a crazy skill that people are going to have to develop, whether they want to or not. And empathetic investment is also becoming a pattern, because it's not saying, hey, I'm empathetic or sympathetic. It's basically saying that, look, I can definitely know where these guys can go as founders. As a founder, I think there's different levels to relate to, but also you can feel or put yourself in their shoes in a lot of different ways. Not just saying, oh, you're Korean. Like that's such a superficial component to it. And I think that the most skilled, or at least the best investors that I've run into and I've been studying the greats, is that you'd actually be surprised how empathetic they are and how well they can connect with people at many different levels, not just one. So it's pretty interesting.
So I'm going to add a slightly different flavor to this, and this may go well, not well, but having worked globally and spend most of my time investing globally, I have a slightly different feel on that. So, when I just talking to a founder out of the Philippines, right? And, you want to be successful in the Philippines, it is having some relationship to the 5 family clans. It just is, right? And so where's that relationship? Then when I was in Burkina Faso, it was, which part of the tribes were you from, right? If you were from the Samo, it mattered. If you were a Mosi, it mattered. In terms of just getting stuff done and being able to have a successful business. So as an investor, I'm looking to de-risk my investment as much as possible. Yes, I look for triple impact. I want, whatever that business is, right, to have a positive impact on society in some way. At the same time, I want to de-risk it too. And, I think it's really nice to say that we can just be blind to identity, but that's not the reality, of the world, right? So if I'm here and, you're African American, it is incredibly hard, right? And, to say that it doesn't exist is really hard. So I think that understanding what that full risk is, understanding how are you going to help them de-risk, their investment and their business is a part of being a good investor too. And just understanding that, because I think that investing is incredibly nuanced. So we keep saying that team, right? That's the number one thing. Part of team is, what is your identity as a team? What's your identity as a founder? What's your identity? It all matters. We like to say that it doesn't, but if you're a female, it matters, right? When you go in, and I've had this from a personal situation where I've come in and, I was the most senior person in the room. And then later I had the head of legal say, when you were in that room and you were talking, Alysson, all that the guys could think about was, what would it be like for you to deep throat them? And I came in talking about business. That's all I was doing. But it was 23 males.
Oh.
And, so I think there's a piece of this where, being realistic, yes, there's an ideal to say identity doesn't matter. But the reality is that I think that it does. Now, how we manage that is, I think, going to be what we all need to do. How do we change that so that we do level that playing field? So it is about the business. But the reality is the identity comes into everything that we do. Anytime that we're walking into a room and we're meeting somebody makes a judgment. And then you're now figuring out what you're going to do about that.
Mm-hmm. Yeah, thank you for sharing that, Alysson. I've had actually many female founder friends who have said that it's incredibly difficult because almost automatically you'll be second guessed as soon as you walk into the room. And so all kinds of things happen in people's heads beforehand. But I think I'll add one thing before we move to our last segment here. Raising money for a startup or investing in a startup, it's dating. So you must have alignment, not just in terms of your thinking process, your outlook on sort of the future, an outlook on the world, but it's a personality match as well, right? So I found that I always work best with people that have a certain sort of kind of belief system or some sort of kind of rapport, same kind of like our conversational style. and that may be universal to other folks. I don't know. But if I find that someone asks me really uncomfortable questions, I know right away that's not a good fit. Same thing with you know, your spouse or your girlfriend or boyfriend or, you know, whatever. So guys, thank you so much for sharing this. There's so much more we can cover, but I think we can do a series. I think we can cover maybe some more specific stuff, maybe one just on fundraising, sort of like what would you do to reach out to investors? What's the process behind that? What kind of conversations you want to have? Also one on sort of how you filter through your investment process. So those may be future ones as well. What I'd like to do with the last few minutes, because we've been going on nearly 90 minutes at this point, is maybe do a quick round the room. I know people have dropped, so it's, you know, even better. It'll make it faster. But just do a kind of thing where we go, hey, you know, here's something I'm working on, I'm really excited about, I need help with, or I can use some perspective or collaboration with. And here's something I can help someone else out with. So yeah, I'm excited about this part. So maybe we can go backwards since we started with the panelists before. Let's go with Emily, who I think might have joined a little bit late, but if you're up for it, please feel free to share.
Yes. Do you mind? So I didn't hear the last part. Can you?
Yeah, it's what I need and what I can help someone else out with.
What I need. That's a good question. I joined because I wanted to learn more about early startups investing. I guess what I need is just trying to find resources to learn more investment in terms of early stage startups. What I can help others. So I work at Robinhood as a trading specialist. I have knowledge in trading equities and options. I guess if you are interested in investment in, you know, stock market, feel free to reach out to me. I'm happy to help.
Great, thank you. William, 30 seconds, please. What I need and what I could help someone else out with.
Sure. So I host this thing called Franchise Coffee Chat at 11 a.m. Pacific on YouTube Live. And a little kind of play off of it, I'm looking to do a franchise pitch competition. So I've never done pitching on the other side. So just wanted to connect with anyone who has sat on the panel before. And then what I can provide is I work for TriNet. And so if any of your portfolio companies are looking for a strategic HR partner, I'm happy to, you know, give you insights on any type of outsourced HR solutions. Thanks.
Awesome. Thanks. And if you want, feel free to drop it in the chat so people can see it later. We're going to share this video. Megan, can you go next?
Yeah, so I definitely appreciate all the panelists tonight and learned a lot. Excited that this is like my first event that I got to attend. So hopefully we'll be able to attend more. I guess what I can you know, offer is, like, I work at Northern Trust, so if, you know, anyone is interested in learning more, we're a pretty large bank. I've been around for quite some time, so offer, you know, custodial banking, financial services. So if anyone wants to reach out to me to talk more about any of that, feel free. But appreciate everyone's time tonight.
Awesome. Thanks, Megan. Tuan?
Before I go, I just want to give a shout out to everybody here and much appreciated for all of your knowledge about early stage startup investing. Another thing I want to say is shout out to Alysson. You are very resilient in your work, and I see like such a strong woman you are, and it's very inspiring hearing all your stories and like how you continue doing your work and doing it globally too. So which is like amazing hearing from you. And I'm also Vietnamese too. So yeah. And what I think what I need is maybe more insight on early stage startup investing. I haven't quite got a good grip of it yet, but this has been really, really helpful. And I'm hoping to be joining more Zoom meeting in the futures and hearing more about this. And what I can help somebody else is I'm opening up to listen any new ideas, and I'm very curious about it. And so if you have anything new startup, you're starting like a new startup or anything like that, I would love to hear it. And hopefully I'll be able to, spread the information and then share with my friends.
Thanks, Tuan. That's awesome. Got 3 Vietnamese folks here. Love it. Vincent, you're up next.
Hey, I'm Vincent. Sorry I joined late. I was in this booth. I had another errand to run. My background is mostly on the legal side. So for a while I was at Fenwick & Weston. I was doing a lot of Series A and C deals. So if anybody needs help with that, I'm happy to talk to them kind of on an informal basis. Right now, what I'm looking for is probably a subject for one of those future talks where fundraising and talking to potential LPs and what that conversation tends to look like. Moving forward, I'm probably going to move it either into the founding space or into the VC space. And so knowing how y'all have handled that conversation would be really helpful for me.
And I'm sorry, what kind of law did you practice again, Vincent?
Oh, corporate law for startups. So I was doing a lot of incorporations and seed financings and some Series A's and also other basic things that started with me.
Interesting. And you're based on the East Coast or West Coast?
California, Bay Area.
Got it. Okay, cool. Thanks. We definitely need more lawyers in the group, so feel free to share with your friends. Hopefully they can join. Yeah. Francis.
Hey guys. My background is basically marketing. I've had like 12 different jobs, so any way I can help, happy to. I am pretty much an open book, so if anyone wants to chat about how I raised, how I found my investors, like where my head was going at, or is curious about the femtech or sex tech space, really looped into that vertical, and I know it's going places right now, so happy to chat through that. I don't really need anything. We're relaunching, so if you guys want to follow along, that'd be awesome, and connect. I love networking. But yeah, this was a great roundtable. Thanks, Sam and Kenneth.
You're welcome. And Francis, actually, one quick idea would be awesome to have you do a quick kind of write up about your experience fundraising for the group, actually, for AIN. I think it would be a real interesting and engaging post. So
yeah,
if you feel
I'm
like
not
that's
in the area anymore. I didn't really know anyone, so I really had to run and gun it. It was interesting.
Okay. Well, yeah, options there. Chinmay, you're up next.
Okay. So first of all, like, thanks to everyone. This was very valuable to me, as every single session of AIN is. I learned a lot of new things. Still, like, there's a lot of holes in my understanding of angel investing and like venture capital, but like this was really valuable. I learned a lot of stuff. I am mainly an engineer. So what I do is I'm the guy who, like, if someone wants some crazy problem solved, like I get it done in time. Like that's where I am. I'm not on the business side of things. I try to put my head more and more in it, but where my company sees my companies where I worked at see my important is like this is the guy who will get things done no matter how complicated the engineering problem is. So I'm on the other side of the spectrum here, like where I don't see much of the business. I'm trying to learn in general, more on the business side of things. What I would like to have more from this group is it would be interesting to, like, hear about your folks' story about how they actually got into angel investing, like how they became an angel investor. How did you get into the circles? Like, whether you have your own investing firm that you started, or like you were a mentee to someone, or like, you just like you said, run and gun it. Like, how did you get started? Like that story would kind of like help me, like, figure out like how I can get in. My next question was like, how do you actually get into angel investing? Like, what is the MVP? What circles do you like spend time in until you pick up enough information? And you can like, okay, now I know enough to like kind of put some money behind someone, or like, how does that process go? I have no idea. But I have some idea now, but like, how do I get to that point? Like, how do I find a mentor? How do I become a mentee? That kind of stuff.
There's a lot of questions, Chinmay.
Yeah.
I think we'll cover some of that absolutely in the next series of panels. I think this actually could be 3 or 4 panels, and you know, I think this could be a series here. But thanks. We'll definitely cover some of that. Kevin, you know the drill. What I need and what I can help someone else out with.
What I need. So I guess more customers is great always. So if you know people who we're targeting like CFOs, heads of finance, those types of people in charge of operations. Our average customers is like 100 to 200 employee size. So if you know people who are in the finance department there, that would be great. And also if you know really good AI engineers, or data scientists, I would like to talk to them. We just got access to GPT-3. I've been playing around with it, doing a bunch of stuff. I have some cool ideas for it, but yeah, I would like to talk with other smart AI people. I've talked to like a few before, and they've been super helpful. So, what I can offer, anything you want to know about startups, when I started out, I read all the articles, like all the Medium articles, like all the books, 0 to 1, whatever, because I was in college. Like I had a bunch of time, like I was a senior. I read all of that, and I did all the incorrect things super fast. So like, if you want to, launch a startup, you're thinking about it, whatever, definitely feel free to message me. I will give you the rundown on like what works, what doesn't, and also just like how to kind of avoid the noise. And if you want to get into Y Combinator, I can refer you. We can do mock interviews, whatever. Yeah.
Awesome. That's great. David?
You know what, guys? This was really awesome. And Ken and Sam, thanks for putting this together. I think what I need, let me say what I need, which is I'm putting together a deal memo for a deal that I'm doing right now for my syndicate. I'll add my angel list syndicate here. But we're putting together a deal for a very, very new podcasting company called Sounder FM. And I'd love to kind of ask you guys probably on another thread on what is your code of conduct? I don't want to like eat up. I really don't want to take up any of the space on AIN for any personal things. I like to kind of leave it like open and kind of more informative. But at the same time, I've done about 3 months of work on this particular deal, and we're really excited about it. So that's one. And I'll add a thing later. The next thing is, in terms of people who are wanting to find out more, and what really did change my framework for myself, because I was an angel investor, and as an angel investor, I did feel as though I didn't have like the decision framework down. I'm willing to give you kind of like a one-on-one, but also and maybe Ken will even attest to this, but Venture University, if you just go look up venture.university, the GPs are amazing. It's like a family as well. And it's been an awesome experience being part of not only the education component, but I'm also on the other side now where I'm actually raising from LPs. So that experience has been really the most fundamental to me, learning how to navigate family offices, fund of funds, institutionals. So I do recommend that. And then also what I'm willing to give anybody that's here personally, communication's open. So if you want to schedule some time, if you want to kind of riff, I'm happy to do so. But, thank you guys for putting this together. So totally available for anybody here.
Tremendous. And I kind of wish we could like create a little bit of a thread somewhere where everyone just kind of just says everything on the AIN channel or like a post. It's not really like the chat here. I can definitely like copy it and put it somewhere afterwards, but it's just easier, so it's more exposed. So I wonder if we started a thread after this, you guys could actually just like throw a bullet point up it just will take a second, and I think a lot of people will get a lot of value out of it. So please do, and thank you, David, for all that. Alysson, what you need and what you can help someone else out with.
Well, first I want to thank Sam and Kenneth for having me here. It's my first time here. Hopefully it was valuable to people. As you guys can see, I definitely have a point of view, and I'm not afraid to share it. I don't need anything personally, but I would just say during like everything that's happening right now, the CDC just came out and said that 25% of young adults, thought about suicide over the last 30 days. And so, please reach out and just be kind to one another. That is my big ask, right? Touch people. We're kind of all in our own little bubbles, but reach out, touch people, make sure you take care of your communities. In terms of, what I can do, you guys, I'm like David, just reach out. You guys kind of know what I do. I've been on the founder side, I've been on the investment side, the corporate side. I've raised money for companies. I give money to companies. I've been on pitch panels before, and I think really my value is going to be kind of global because I've done so much work, kind of internationally. So just ask. All I can do is say no, or that I know somebody else that can help you.
Awesome. I wonder if we can do a pitch day at some point, if we get enough traction in AIN, maybe enough companies out there that are interested in raising a round. Yeah, Sam, do you want to go next? And I'll close it out.
Yeah, sure. First, I want to thank our amazing panelists. Thank you so much for contributing so much of your time and your knowledge. I think it's been really valuable, as you can see by everyone's answers tonight. I personally learned a lot as well, so thank you so much. Really appreciate it. What I'm looking for, I guess, is more contributing on AIN, more inviting of your friends and people you know who could benefit from this group, and yeah, just looking forward to building out AIN more and making it more valuable for everyone. What I can contribute is maybe helping to connect people. Maybe you want to meet people that are in the group and you don't know who's doing what. I can help with that. So thank you.
Yeah, I can attest to the fact that Sam knows what everyone does. I'm just kidding. No, I mean, there's a lot of depth to our group that I think that is fantastic. I think we can also take more advantage of each other, so it's great. I'm just going to reiterate, our mission is basically building a community of investors, and I want us to not just share but also connect. So I think Sam, both of us kind of agree that that's what these panels are for. Well, as far as what I can offer, I've been on both I worked at a technology research group under the Gartner umbrella. It was quote unquote a think tank. So I've kind of done sort of that research side. I was also part of a hyper-growth company that exited for 1.2 billion. I was an early team member. I opened several offices for the company. I've also been a product manager, and also now I've been fairly in-depth in the sort of New York City-based angel investment ecosystem. So I think where I can offer a perspective is I can certainly look at decks. I can certainly make connections, introductions where necessary. And I know enough about technology, software and hardware to be dangerous. So I at least can be generalist enough that I could pass you on to maybe Kevin at some point. Perhaps that might be good opportunity. As far as my need, right now, one of my big projects right now actually is working on a company called Finvar, which is sort of a love child between Bloomberg and LinkedIn. The idea is that it's simplifying actually financial intelligence that comes in really bad raw data format, and making the whole process of creating a hypothesis of investments for institutionals to corporate bankers much more simplified. And it's also connecting people with sort of like qualitative information as well. So quantitative, qualitative into one platform. And we just got a 150 soft circle 150K. We're hoping to raise a $1 million round in a few months. So, you know, at some point, I'd love to actually run that by some of you folks here. Might have some perspective, and maybe we have a further discussion. So yeah, I mean, that's kind of my ask. My other ask is this: I hope to see more and more posts from you guys, and maybe participation for our next series. So let me know what you're most excited about, and we can kind of set that up and have another discussion just like this. Sound good?
Awesome.
Great.
Thank
Well, I
you
think
all.
it's a good note to close out on. So thank you very much. Thank you to the panelists. Thank you to the audience. Okay.
Thank you guys.
Thank you. Have a
Bye.
good night.
Thanks,
Thanks,
everyone.
Have a good night.
Bye-bye.